Welcome back to Talk Takers, your one-stop shop for all things earnings calls. Today we're going to be diving deep into Dave & Buster's Q3 2024 report.
Yeah, this should be an interesting one.
Definitely interesting. They're the classic games and food chain, right? Good food, good fun.
Right.
But this quarter had a little bit more than chicken wings and arcade games.
For sure. The stock actually ended the day up almost 4%, but then after hours, it kind of took a tumble. So clearly something in that release or on the call spooked some investors.
Yeah. And one thing that always shakes things up is the CEO leaving.
Definitely.
And that's exactly what we saw with Dave & Buster's. Chris Morris is out.
Yeah.
But it's not your typical CEO departure, right?
Right. The interim CEO, Kevin Sheehy, is actually someone who's been there before.
Yeah, he's held a CEO position before. And he's also, by the way, the current chairman of the board.
Exactly. So it brings a little more stability, a little more continuity to the whole situation.
So it's not like they're bringing in someone completely new.
Right. Exactly. And he's also said that the current growth strategy, which they developed with the entire board, is going to stay in place.
So they're not just like, we're going to blow everything up. We're going to try something totally different.
Exactly. They're staying focused. And that focus is on their 6 key initiatives: marketing optimization, games pricing strategy, better food and beverages, remodels, special events, and tech enablement.
I mean, those sound like some pretty substantial areas to work on.
Yeah, for sure. So yeah, even though they're searching for a new CEO, the ship is sailing in the right direction, for now at least.
Okay, so familiar direction, but new leadership, potentially.
Right?
What about the numbers? What did we actually see in this quarter?
Well, Q3 is normally their weakest quarter, and this year was no different.
Uh-huh.
They saw a 7.7% decline in same-store sales.
Oof, that sounds pretty rough.
Yeah, it does initially sound a little scary, but I think there's a little bit more to it than that.
Okay, so 7.7% decline. What's the deeper story there?
Well, that drop is calculated on a like-for-like calendar basis.
Okay, what does that mean?
So they're adjusting for holiday shifts, which makes the comparison from year to year a little less reliable.
Okay, so you can't exactly compare this year's Q3 to last year's Q3.
It's not a perfect comparison, so we have to take that with a grain of salt.
Okay, interesting. So maybe not as bad as it sounds initially.
Right.
What about looking ahead to the whole year? What kind of guidance did they give?
So they're projecting their adjusted EBITDA to fall between $505 million and $515 million for the full year.
And for anyone who doesn't follow earnings calls super closely, remind us what EBITDA is.
Yeah, so EBITDA earnings before interest, taxes, depreciation, and amortization. It's basically a way to measure profitability.
Okay.
So looking at that guidance, it seems like Q4 could be very similar to Q3, maybe a little bit better.
Okay.
Which seems a little cautious, don't you think? Especially because they're reporting really strong bookings for special events for the holidays.
So they're saying, hey, Q4, it'll be okay. But they've got all these events booked. So it seems like a little bit of a mixed message there.
It does.
Okay, so we have this kind of puzzle, right?
Right.
Weaker than expected Q3, but cautious optimism for Q4. But at the same time, their new stores are opening and doing great, meeting or exceeding expectations. And not just exceeding expectations, they're seeing historically high returns on investments with these new stores.
Right.
What do you make of these different threads of the story?
Yeah, it's definitely a little strange. So maybe we can look a little closer at those 6 key initiatives and see if we can find any clues there.
Yeah, let's dive in. What's the first one?
So just let's talk about marketing optimization. It's a big one, and it seems like they have a lot of work to do.
They do.
They've admitted to overcorrecting. They moved too much of their spending from traditional TV advertising over to digital.
So instead of trying to get their name out there as much as possible.
They went too narrow with the targeting.
Interesting.
Yeah.
So have they recognized this problem, and are they trying to fix it?
They are. They're doing some interesting tests. They're going back to a little bit of linear TV advertising.
Oh, okay.
And they're specifically targeting ad spending around those brand new stores that they're opening.
So really trying to get the word out locally.
Exactly. And they're also piloting something called a Winter Pass.
And Winter Pass, what is that?
It's a program designed to drive loyalty and repeat visits.
Okay, so get people coming back more often. Interesting.
Yeah, it's a really fascinating move because it could incentivize customers during a typically slower period.
Right, winter. People are probably less likely to go out and do things.
Exactly. And it could also help them gather data on customer behavior and preferences.
Okay, so they're using it to gather data too, so they can understand their customers better.
Exactly.
Speaking of data, let's talk about that next initiative, strategic games pricing.
Okay.
So this is kind of mind-blowing to me, but apparently they haven't raised game prices in over 25 years.
That's pretty amazing when you think about it.
I know. Inflation has definitely happened over the last 25 years.
Right, exactly. But now they're finally starting to change that. They're using a data-driven approach to make very specific price adjustments in real time.
So it's not just like they're raising the price of everything by $1.
No, they're being very strategic about it.
That makes sense. What about new games? Are they bringing in anything new to get people excited?
Oh, yeah, they have some new games coming out in spring 2025, including one called The Human Crane.
Oh, wow. I have no idea what that could be.
Me neither. But it sounds exciting.
It sounds intriguing for sure.
And it also shows that they are committed to innovation and keeping things fresh.
Yeah, you have to if you're in the entertainment business.
Exactly.
Okay, what about remodels? How are those going?
So it's kind of a mixed bag with the remodels.
In what way?
Well, their fully programmed remodels seem to be doing well.
Okay, what's a fully programmed remodel?
Basically, it's not just a cosmetic makeover. It's a complete revamp of the entire space. They're incorporating social gaming areas, redesigning the dining and bar areas, really creating a more immersive experience.
Okay, so not just new carpet and paint.
Exactly.
So if those remodels are doing well, what's the problem?
Well, the remodels that aren't fully programmed seem to be underperforming, and they've admitted that they may have been a little too aggressive in rolling out those remodels without enough marketing and operational support.
So even a good idea can flop if you don't execute it properly.
Exactly.
Well, this has been a really interesting look at the Dave & Buster's earnings call. We've got a lot more to unpack, including that this is not financial advice segment, where we'll pitch some fun, outrageous trade ideas.
That's my favorite part.
But first, we're going to take a quick break. Stay tuned for more Talk Tickers after this. And we're back with Talk Tickers. All right, let's get to the fun stuff.
Right, our This Is Not Financial Advice segment.
The disclaimer, of course, this is all purely hypothetical and for entertainment purposes only. We are not financial advisors. Please do not base any actual investment decisions on what you hear here.
We can dream, though, right?
Exactly. We can have fun. So, given everything we've talked about with Dave & Buster's so far, what kind of crazy but maybe plausible trade idea comes to mind for you?
Well, I'm thinking because of that cautious Q4 guidance and, the current economy overall, short-term bearish, long-term bullish.
Okay, I like that. Short-term bearish, long-term bullish. What does that actually look like in practice?
Well, we could bet against play in the short term.
How would we do that?
Maybe through put options or a short sale, just trying to capitalize on that potential continued weakness as they work through these, all these challenges. But at the same time, we'd buy long-dated call options.
So we're kind of making a bet on both sides.
Exactly. We're betting that in the long term, those growth initiatives and the new CEO, whoever that ends up being, will be successful.
Okay, so short-term pain, but long-term gain.
Yeah. High risk, high reward.
You got to be careful with that strategy.
Definitely. And again, this is all hypothetical. This is not financial advice. Do your own research, understand the risks, and definitely talk to a financial advisor before you make any trades.
Great advice. Okay, let's come back to reality for a minute and recap what we've learned about Dave & Buster's today. They're definitely facing some headwinds.
Yeah, no doubt about that. That weaker Q3, CEO leaving, all those challenges with marketing and the remodels.
It's a lot to deal with.
It is. But it's not all bad news, right? They do have a good growth plan. Those new stores are doing well. And their events business seems to be going strong.
Okay, so some positives in there.
Right, exactly. And I also like that they're not pretending that everything's perfect. They're admitting that they need to change course with the marketing and the remodels.
Taking ownership, I like that.
Yeah, it shows that they're paying attention. But the big question, the thing we need to watch for, is execution. Can they actually put these plans into action and achieve that long-term vision?
Yeah, it's one thing to have a plan on paper.
Totally. It's another thing to make it happen. And before we wrap things up today, I want to leave you with something to think about.
Okay, hit me with it.
What does Dave & Buster's, their success or failure, tell us about the bigger picture of what consumers want? Are people still looking for experiences even with the economy being uncertain?
That's a good question. I mean, if people are cutting back on spending, entertainment might be the first thing to go.
Right. But then again, we're seeing this big demand for things that bring people together, things that help people escape and connect with each other.
Experiences over things, right?
Exactly. And Dave & Buster's, they offer that. It's not just games or food, it's about making memories.
Spending time with people you care about.
Yeah. And taking a break from the daily grind. If they can tap into that emotional need that people have, then they might be able to handle whatever the economy throws at them.
But they had to be smart about it.
For sure. It's all about finding that sweet spot between nostalgia and innovation, keeping the things that people love about them, but also changing with the times.
And appealing to those younger customers who are used to things being very high tech.
Exactly. They need to evolve the experience without losing what makes them Dave & Buster's.
So big challenge ahead of them. It'll be interesting to see how it all plays out.
Definitely. And now it's time for our second "This is not financial advice" segment of the day. So another outrageous but plausible trade idea.
Let's hear it. What are you thinking?
So considering their emphasis on technology and their goal of making the customer experience better, I think they might be thinking about a strategic acquisition.
Ooh, an acquisition. Okay, what kind of company are we talking about?
Well, how about a company that specializes in gamified loyalty programs or personalized entertainment recommendations?
Interesting.
Right. Imagine Dave & Buster's buying a company that could make their app amazing, offering personalized suggestions for games and food.
Even special events.
Exactly. It's a bold move, but it would show that they're serious about innovation and pushing the boundaries of the Dave & Buster's experience.
It would be a big change.
It would. It could really allow them to personalize everything, make their loyalty program more engaging, and gather even more data on what customers want.
And potentially that could give them a real edge over their competitors.
Exactly. So big hypothetical move, but it's fun to think about the possibility.
Yeah, and just to reiterate, it's all purely hypothetical. We're not saying that Dave & Buster's is actually going to do this. This is not financial advice.
Right, exactly. Okay, I think it's time to bring it all back to that big question we posed earlier.
About Dave & Buster's and what they tell us about the state of the consumer.
Exactly. What does their success or struggle say about what people want?
It's a tough question to answer definitively.
Yeah, it is. But it makes you think about how entertainment is changing and how companies like Dave & Buster's need to adapt to survive.
Consumers have so many choices these days, and they expect a lot from the companies they choose to spend their money with.
They want experiences that are personalized, exciting, and memorable, and they'll stick with the companies that give them that.
Dave & Buster's has a lot of history and a lot of loyal customers, but they can't just rely on that. The decisions they make now will determine whether they can stay relevant and keep their spot as a leader in the entertainment industry.
It's a really interesting story, and we'll definitely be following it closely here at Talk Tickers.
This has been a great deep dive into the Dave & Buster's Q3 earnings call.
It has.
We covered a lot today, from CEO changes to strategic initiatives to our "this is not financial advice" speculation.
We even got a little philosophical.
We did. But as always, we encourage everyone to do their own research. Don't just take our word for it. Look at those earnings call transcripts, read the company's filings, and form your own opinions.
Exactly. That's what investing is all about. It's about learning and discovery.
Absolutely. Thanks for joining us on Talk Tickers, your go-to source for earnings call insights. We'll be back soon with another deep dive into the world of business and finance. Until then, stay curious and keep those brains ticking. Yeah, it is a fascinating idea, acquiring a company just to, really boost their tech and personalization game.
Yeah.
But it also shows that, they're kind of walking this tightrope,
Yeah.
appealing to those loyal fans who love that classic Dave & Buster's experience,
Yes.
but also attracting those new customers who expect things to be a little more, tech savvy and personalized.
Yeah, like they're trying to connect with two different generations of entertainment consumers.
That's a tough challenge.
Yeah, it is.
And of course, you have to reiterate, this is all hypothetical. This is just us having fun exploring what's possible, not giving actual financial advice.
Right, not financial advice.
But it does make you wonder, what does the future hold for Dave & Buster's?
It all comes back to that big question we asked before.
Yeah. What can we learn from Dave & Buster's about what consumers want these days?
Are experiences still what people are after, even with the economy being a little shaky?
Yeah, that's a tough one to answer. I mean, you could say that people are cutting back on things they don't absolutely need,
Yeah.
and maybe entertainment is one of the first things to go.
Yeah, that's true. But then again, we're seeing that people really want things that brought them together,
Right.
things that let them escape for a bit and connect with other people.
It's like they're choosing experiences over just buying more stuff.
Exactly. And
Yeah.
Dave and Buster's, they offer that, right? It's not just about playing games or eating, it's about making memories.
Yeah, spending time with friends and family.
Right, just taking a break from everyday life. And if Dave and Buster's can really tap into that need that people have, they might be able to weather any economic storm.
As long as they're smart about it.
Exactly. It's about finding that balance between nostalgia and innovation. Keeping the things people have always loved about Dave and Buster's, but also bringing in new things, new technology, things that appeal to a younger crowd.
So evolving, but not losing what makes them unique.
Exactly. They need to understand their customers, what motivates them, what they're looking for.
And it has to be easy for the customer, right?
Mhm.
From the minute they walk in to the minute they leave, everything should be smooth and enjoyable.
Right. Think about mobile ordering, personalized recommendations, maybe games that are interactive and kind of blend the real world with the digital world.
That's cool. And one thing that Dave & Buster's has always been good at is that sense of community.
Yeah.
It's a place where people come together to celebrate, to compete,
Yeah.
to just be together.
They have to keep that going, both in person and online. Create a space where everyone feels welcome.
Like it's more than just being a customer, it's being part of something.
Right, being part of the Dave and Buster's community.
Right. And if they can do all of that, they have a real shot at not just staying afloat, but actually doing really well in this constantly changing entertainment world.
Yeah, I think so. It's definitely going to be interesting to see how it all unfolds.
So this has been a really fascinating deep dive into the Dave & Buster's Q3 earnings call. We covered so much.
We did. We talked about the CEO leaving, all those strategic changes, and even threw out some wild trade ideas.
Not financial advice, of course.
Oh, right, definitely not financial advice. But we also got to talk about some bigger questions like, what does the future of entertainment look like? What do consumers really want?
Yeah, it's a lot to think about. And we always encourage everyone to do their own research. Don't just take our word for it. Look at those earnings calls, read those company filings, and come to your own conclusions.
It's all part of the learning process. That's what makes investing so interesting.
Absolutely. Thank you so much for joining us on Talk Tickers.
It's been a pleasure.
You know, we're your one-stop shop for all things earnings calls.
Until next time.
We'll be back soon with another deep dive into the world of business and finance. Until then, stay curious, keep those brains ticking, and happy investing, everyone.